we do know is the Fed jumped in here at Dow 6,000 to start quantitative easing one. So the real bottom of this market could be Dow 6,000, could be lower. Let's just say it's 6,000. I think we're going to see a 1-to-1 ratio to the Dow Jones Industrial Average and gold, and maybe a 15-to-1 or maybe even a 10-to-1. Gold to silver. So, I mean, just do the math. It doesn't take a lot to figure this out. And you can see why I believe that.
Gold and silver prices fell on 3rd August as Treasury yields rose and Fitch downgraded the U.S. credit rating. Gregory Mannarino, a capital markets trader, believes that there is a correlation between the stock market and the prices of precious metals. He believes that the stock market could go lower in the future, which might affect the prices for gold and silver. An expert investor, Jeremy Grantham, known for predicting big stock market crashes, is saying that the market is getting closer to a situation where a bubble will burst. This would be similar to the big financial problems we saw in the years 1929 and 2000. Mannarino highlights that interest rates are low, so people are investing in stocks. When interest rates go up, the stock market will go down. Money will move from stocks to other investments like gold and silver. The Federal Reserve might raise interest rates one more time this year if inflation doesn't go down. Jerome Powell, the Fed chair, said they'll keep a close eye on everything. Mannarino also believes that silver is incredibly undervalued compared to other assets. Let's watch snippets from Gregory Mannarino's interview, but before getting into the video, make sure to subscribe our channel and give this video a thumbs up. Currently, 96% of our viewers have not subscribed to our channel. We have reached 1,000 subscribers. We couldn't have done it without your support. Our next goal is to reach 2,000 subscribers. Please consider subscribing to our channel and helping us reach our target.
I'm a simple guy. I try to keep things very, very simple. And what I want people to do always is their own homework. All right. I want people who are watching this video right now to do one thing, and they can open up a search engine as they're listening to this. Look at the Dow Jones Industrial Average gold ratio and the gold silver ratio. But by looking at these, you can see why I believe, and I've said this for now since forever, that silver is the most undervalued asset on the planet. So it's a pretty simple to understand. I believe eventually we're going to see a few things happen. We're going to see again a debt market meltdown, which is going to pressure equity markets around the world. Where the bottom is with regard to the Dow, no one knows. And commodities are real things. So what's going to end up happening? See, markets are supposed to run in cycles. Okay, they're supposed to do this. Although today this market seems to do nothing but go higher. Up until very recently when the MMRI crossed 250 for the bunch time, and every time this happens, it seems like the market takes a hit. But generally, you get corrections and you get pullbacks. We don't see this anymore, but eventually this is all going to turn around. We got a risk-on cycle, meaning cash deliberately making its way into the equity market via suppressed rates. When rates spike, and we're going to get a meltdown in that debt market. It's a matter of time. You're going to get the meltdown here. You're going to get cash bleeding out of the debt market, cash bleeding out of the stock market. It's just going to move. Cash does not fly away to money heaven. It doesn't grow little wings and fly away. It just moves from one set of assets into another. It's very simple to understand. And I believe we're going to see an ocean of cash make its way into commodities when all of this stuff melts down. And again, other assets. And we're starting to see that again with classic cars and classic instruments and artwork and stuff like that too. So it's just a matter of time. So right now, I think is this opportunity. You can look at all this stuff and say, oh my goodness, it's all doom and it's gloom, but it's really not. It's about opportunity. As we started the video off, it's about people taking action, but doing their own research too. Don't listen to a damn thing I'm saying without understanding it, doing your own research. And then if you come to the conclusion that, hey, Greg Mannarino is actually right, then you take action, of course. I mean, I don't want anyone to jump into anything they don't understand. That you have to understand what you're doing before you do it, quite obviously. People need to, again, bet against the debt, become their own central bank. I've been telling this people since I started, since day one, meaning hold hard assets. Okay, physical silver, my favorite asset of all time.
Mannarino highlights that central banks create more debt to keep control over us. He emphasized that when there was a big concern about the debt ceiling, Janet Yellen was worried about this because she knows that the global banking system is heavily reliant on central banks creating debt. At that time, the U.S. Treasury Secretary, Janet Yellen, has warned that if they didn't increase the limit on how much money the government can borrow, debt ceiling, there could be serious problems. They might not have enough money by early June. If this happens, the government might not be able to pay things like salaries and support for people in need. Mannarino highlights that Fed act like they're going to raise interest rates to fix inflation, but that doesn't really work. All it does is make it hard for regular people and small businesses to get loans. The Fed expect that interest rates will go up to about 5.6%. This is a bit higher than what they thought in March. Jerome Powell talked about how prices going up, inflation, have slowed down a bit since last year. But even though it's gotten better, it's still a long way from where they want it to be 2%. They need a lot more progress to reach their goal. Let's get back to the Gregory Mannarino's interview.
What do people believe is more likely to happen? You see, that this is how I look at things like this. Okay, what is the most likely situation to unfold? Are we going to actually get some kind of real spending cuts, or are our politicians colluding with central banks more likely to continue to inflate, or at least try to inflate out of it, which is an impossibility? So my bet, and I believe that 99% of the people who are listening to this are going to agree, they're going to continue to inflate. So we're going to see more of this here. What people also don't understand is central banks, how they keep their control on all of us is by their ability to inflate, create more debt. Do you remember during the whole debt ceiling escapade over here, the worry on the face of Janet Yellen? Oh, no, we need to do this again, because the nanosecond that we can prevent a central bank from issuing more debt, even $1, the entire global central banking system starts to die. Now, they will not allow that to happen. Central banks are in control. Central banks are the government. And everything else is just a sideshow. So inflationary pressures are going to get much worse moving forward. I don't care look, central banks have been pushing the biggest farce probably in financial history, one of the biggest pieces of charades on the people of the world here. Oh yes, we're going to raise rates. Raising rates is going to eventually cause a miracle, and inflation is going to drop. No, it's not even meant to do that. All this does is cut off the availability of credit. They're crushing small businesses here by design, crushing the consumer by design, and fulfilling a corporate agenda. This is what I told people since day one. It's proven to be true. And then the more you hear from the mainstream how things are getting better, frankly, how much worse they actually are getting, because all you can get from the propaganda ministry is lie after lie and deception and distraction. Again, thankfully, there are shows like this where people can get the truth. These dollars that we hold in our bank accounts and our wallets, we don't even own them. They're owned by the issuing central bank, in this case, the Fed, and they're owed back to the Federal Reserve plus interest that they create out of nothing. All people work for is the ability to borrow those dollars from the Federal Reserve in whatever form they may exist, more than likely digital. But anyway, that's it's a crazy concept to understand that central banks control the economy, they control the financial markets, they control the financial system. So henceforth, they control the world. The rest of it doesn't matter anymore.
What do you think about the possibility of a stock market crash? Is it time to start investing in gold and silver? Do you agree with Gregory Mannarino's prediction? Let us know in the comments below. That's all from us. If you like this video, please like, share, and subscribe to our channel and click the bell icon to be notified when we release new videos.